What's good? It's Dom back here with a really good one for you guys. How to buzz down top down analysis fast, easy, and simple. I'm gonna really try to make this super easy and simple for you guys on what I look for from my perspective. Granted, this is not financial advice. I am not a financial advisor. Just have to throw that disclaimer out there. But this is how I see the markets from a monthly, weekly, daily, all the way down to a 15, 5-minute, 1-minute time frame. Price is fractal. I want you guys to keep that in mind. Price is fractal. So what's happening on the higher time frames is happening on the lower time frames. All right. A lot of times I know in my early development I would be so confused about, man, what's like the higher time frames move so much slower. Like I'm thinking like on the 15-minute, 5-minute time frame, like something else is happening. But dude, price is price, right? And it just you're looking at it. I'm gonna try to like kind of bust this down so like I can finally like get you guys unconfused, right? Like because I was really confused with that. I know in my early development when I first started trading. So through trial and error and through mentorship, I figured it out, and man, I want to try to give it to you guys in a shortest, easiest way to digest, okay, without overcomplicating it. So let's get right into it, man. Before we get started, man, make sure you like, subscribe, and give me your thoughts, man. On give me your comments, questions. I look into all that stuff, man, as I grow this channel. So right here, I'm on the monthly time frame, right, and what I'm looking for is I try to keep things as simple as possible, right? I'm looking to see. You always ask your question. I always start with this. I ask the question: where was price? Where did it come from? Where is it right now? Where's price right now? And where is price most likely to go to next? Those are the three questions that I always ask myself, regardless, every single day before when I sit down and I open up my chart. Where was price? Where's price now? Where is price most likely to go to? You just ask yourself those three simple questions every single time you get into a chart, whether you're doing top-down analysis or whether you're getting ready to just go ahead and execute, right? You're always asking yourself those three questions, because what that does is it really I can't explain it, but it really opens your mind up to really like see the charts in like the most simplest way possible. Honestly, man, trading is simple. We try to overcomplicate it because that's just what our brains want to do. But it's not that difficult. All right. So we're on a monthly time frame, right? So here's the questions that I'm asking myself. Okay, Dom. All right. Right now we can see price has been the order flow, the institutional order flow has been bearish, right? I mean, it doesn't take a rocket scientist to see that. We've been bearish. If we're looking at just this most recent, price action, right? We've been bearish, right? But overall, we can see we've kind of just been range bound in between, these price points, like right here. Okay, so we've been in an overall range bound market on the dollar index, right? And that's on a bigger perspective. So I know I can answer the question on the monthly time frame. I typically write this out. Right now we are we're in the overall range bound market. Currently we are bearish we have bearish institutional order flow in a range bound market, okay, profile. So I'm expecting a breakout very soon. and now break out in terms of retail. Yeah, I guess you want to say that. So we're expecting price to break out of this range, right? Because typically whenever there's consolidation or a range, you're gonna see an explosive move. And so now that I know we've been bearish, right, I can just look at it. I really don't start drawing on my chart because I am a short-term day trader. I can just see the key levels here, so I would kind of look for the most recent swing high in that bearish market, and I can see that this is the most recent swing high, and we look at that, I can see that there's two higher lows. I'm sorry, there are two lower highs at this higher high, okay? And so that is your swing high, okay? And that's when you can see that bearish structure start to take place. And I go bust down into the weekly time frame, and what I can see here is that we are at, we're kind of like at a key level here, right? When I'm looking at price from an institutional perspective, we're seeing, we see price, as more so is price at a premium as far as price at a discount. Okay, so the old montage, buy low, sell high, right? For some reason in the trading community, with a lot of retail concepts, like, people forget, like, that is just like as basic, that's economics 101, right? It's like you buy low, you sell high. It's in any business, that's in any industry. So that's what I want to look for. I want to see if are we at a premium price, or are we at a discounted price? Right now, when I see like strong bearish order flow, I'm thinking in terms of, oh wow, man, we're getting repriced at a discount to buy up. So I'm anticipating a swing low to form for a market shift, or for a market reversal. I don't predict reversals when they happen or how they happen. I just anticipate, right? And I react once I see the things form in my favor. But I'm not trying to go into the market and plan the market. You're gonna get smacked around. You're gonna get your ass spanked, to be honest with you, when you start trying to try to predict too much, and that's another key thing in my development. It's like, man, develop anticipatory skills, right? I don't know if I said that shit right, but anyway. So in order for me to see where we are currently priced at, I go back onto the monthly, right? And so this is how I use my fibs, or one of the ways I use my fibs. You don't have to use your fibs just for entries, right? Like, what I'm looking for, I'm measuring out to see where equilibrium is, where that 50% mark is. Anything above 50%, I know we're at a premium. Anything below the 50% mark, I know that we are at a discount. Okay, and so I look for that most lowest low and that highest high within recent time, and I just delineate it, and I just kind of mark it out here. So I know that we're at a premium here, and then I look below that 50% mark. Here, I know we're at a discount. So now I can take the fib off now. Wait, what did I do? Let's take that fib off the first. Let me do this. So I draw out the equilibrium so I know where that's at. I think I just did that. So what I do here is, sorry for that awkward silence. All right, so now from the higher time frame, sorry if I'm jumping around and everything like that. I'm just trying to make it clear for y'all. So when we're here at a monthly, when I'm framing this from a monthly perspective, I know currently we're at a discount, right? We're repriced at a discount. So I am anticipating a swing low to form to get back up in premium pricing, regardless if it's gonna, if it's coming back down. I'm trying to anticipate a new swing high. Now, granted, this can continue to go straight down, because what I'm seeing here from a monthly perspective, I do see a order block here. Okay, I see an ICT bullish order block, and you have all of this this inefficiency, right? You got all this inefficiency. You got all this buy side and no sell side, to balance this out. So price could be coming down to balance out this inefficiency that you see right here. Okay, so I'm keeping that in mind as well, right? So I'm like I said, this is I try to keep a higher time frame perspective, but this can play out over months. Like, it's not necessarily going to play out like in the next 2 days, especially from a monthly time frame. So just keeping all these things in mind, and I mark that up. I just keep that in my perspective. I try to keep my charts as clean as possible. And so then we come down onto the weekly time frame, right? So we're looking at where price is currently at, and we see that it did actually, from here it did 2 OTE patterns, ICT OTE patterns. I can see them without even placing the fibs on them. I can see that price retraced. Now it's going back bearish. Okay. Now, granted, we're at a deep discount, so we can see price come back up and go after this order block here, right? Let's see. This bearish order block from a weekly perspective. Last up candle, and then it just shot right through, right? And so it needs to come back up and retest that. So we're looking at that from a weekly perspective. This very well can happen, and so I'm keeping that in mind too. I'm delineating that. So then I come down and I refine it from a daily perspective, right? So I'm just trying to form a basis, or I'm trying to form a bias, right? And so you see where that weekly order block was, right? So I'm gonna refine it. What do we see here? We see a huge fair value gap. We see a gap in price right here on the daily time frame. So, with that being said, I see this goes back to those simple questions. Where is price right now? Where did price come from? And where is price most likely to go? From this higher time frame perspective, it can get all the way up to this fair value gap. Okay. And what we're seeing right now is, from a weekly perspective, we're seeing a swing low. We're seeing a swing low perform right here. That is delineating, or that is giving me the anticipation, I should say, for price to reverse. Okay, because you have higher low, and then you got that lowest low right here in the middle, right? We have 2 days left in the week. If this were to, I don't care, it doesn't have to break this high or anything like that. As long as it doesn't break this low here, right? This weekly low, then I can see over the next, at least for this month of June, we can look for bullish order flow on a short-term time frame. So what I'm trying to do is bust down how I'm looking at it from the higher time frame and how I'm trying to frame my lower time frame perspective, right? Remember, price is fractal, and what I'm looking for is where price currently is, where price is currently most likely to go. And right now on a daily time frame, we can see. So then when I come down to the daily time frame, I just kind of refine everything what I saw on the weekly and on the monthly. And so what I'm seeing here, so we know this right here is that swing low on the weekly time frame. This is a very, very interesting, this is a key level for sure, because we can see through history price reversed at that level, right? So this is also telling me that we're at a potential market reversal to go up bullish, right? So now when I come down, now that I can frame, all I'm trying to do is frame where price is most likely to go. We know we're at a discount. So this is what we know. We know we're at a discount from the higher time frame perspective. We know we're priced at a discount. So now we can start to anticipate those swing lows to form on the daily, on the hourly, right? And now we're just looking, we can actually see from a daily, if we're just looking at this one candle, we know that we're seeing strength in the dollar, okay? We're seeing strength in the dollar, and we can anticipate the foreign currencies because the dollar index is the benchmark. So now we can just anticipate the foreign currencies like Euro USD, GBP USD, to, if that's what, if I'm trading against the dollar, I can anticipate those currencies to be bearish now, right? And that's plain old market sentiment, which I'm not going to dive too much into. I'm going to try to keep the topic at hand, just doing top-down analysis. And this is just kind of like the first part in this series too, man, because I feel like that there's a lot more to just really like delve into, and I'm trying not to bore you guys with too much or overload you. I'm just trying to make it as simple as possible for you. So now that we come down into the hourly time frame, we can start to frame all of, kind of like looking for order blocks and looking for liquidity, where price is most likely to be attracted to. Okay, we know that there's liquidity resting here. We know that there's a bearish order block right here that price can be coming to. And so right now, this is all I need to see on the dollar. Like, I don't really, I'm looking at, okay, we're bullish, right? And then so when I come down to the actual currency pair that I trade, look, what do we see? We see a bearish Euro USD, right? You see a strong dollar, you're going to see a weak foreign currency pair, okay? Because that's our benchmark. So now when I do I do the same steps that I just took on the dollar index. With these, I measure out the lowest to the highest, and I see where that equilibrium is, and I see, okay, where are we? Are we at a premium price, or are we priced at a discount? Right now, I can tell in this current structure, we're priced at a premium, because all I do is boom, boom. I measure that out with the fibs, right? And you can see right here, we are priced at a premium. All right, and here below, we are priced at a discount. So when I'm going into this, so then we do this one more time again. Equilibrium. So now that I know, okay, we go back to and we compare, right? We're looking at, so here on this, like I said, the dollar index is our benchmark. We're at a discount. Euro USD. It's supposed to be opposite, right? It's supposed to be symmetrical pricing. And right now, we're priced at a premium. So so now I know that I should be looking for, I should be framing, or I should be getting a bias. Like really, I'm not, because you have top-down analysis, you're looking at if I'm day trading, right? I'm looking for, we know we're bearish. So now all you need to do is, now that we know that we're at a premium, all you need to do is look for your entries. And this is not a video based off of entries. I just wanted to do a top-down analysis and just show you, now when you go into these smaller time frames, you know that overall you're at a premium price, okay? And you can do this this from a monthly perspective, but you can do this from a daily time frame, because if you do this from a daily time frame, which I'll show you as well. So we look at, okay, so now we're at a daily time frame, right? So we see this most recent high is high and that low is low. And then you measure, boom, boom. Oh, so we're still, what do you see on a daily perspective? We're at a premium. So that's how you're trying to look at it, man. You're just trying to see it from the perspective of, are we at a premium price? Or are we at a discount price? That is gonna, man, I wish I would have known that so early on. This little nugget right here, man, is going to help you tremendously, no matter what, how you're trading, whether you're day trading or swing trading or what have you. You always want to know where price is, where price was, and where price is currently going. Price was at a premium, it got at a discount, and what happened? Bought up. Buy low, sell high. Buy low, sell high. Buy low, sell high. Right? That's it, man. Like, you just buy low, sell high. Like, keep that shit simple. And right now we're at a premium, so we can be looking to short the market, right? Like, we see the swing high forming right here, right? We see the swing high forming right here, and you have the dollar index as your benchmark. That's why the Dixie dollar index is very, very imperative that you pay attention to, okay? Because it really will frame how you look at these foreign currency markets. So right now, Euro USD, I can anticipate for this liquidity to be taken out and potentially we see this liquidity void right here, this void in price. I can see it coming down to here, and you're looking for like the most likely areas that price could potentially come to, right? You have a liquidity void right there, right? Then you have a look right at equilibrium, dude. You got a daily order block. You got a daily order block right here. So you got that daily order block, another void in price, another liquidity void. What I mean, I'm sorry. So you got that liquidity void there. You have another daily order block that is right at equilibrium. So plus a daily order block, right? So you got that daily order block right there, and it's right at equilibrium. So that's our sensitive area in price. So you can anticipate most likely first, second. If it goes through that, then you can see that you have another order block, and you're just looking for all the bullish order blocks, right? You're looking for the opposing order blocks, the opposing liquidity voids, fair value gaps, all that stuff, right? So that's all I'm looking for, and that's how I'm framing my bias from day to day, right? Now to get, like I said, this is how you frame your weeks out. This is how you frame your days out. I know I'm at a premium on my foreign currencies. I'm at a discount on my dollar index. So now, like I said, I'm anticipating a strong dollar, and I'm anticipating a weaker foreign currency. So now you are looking for high probable setups, right? And so now when you come down to the hourly, the 15-minute, you're looking to frame your trades based off of that. But this is not an entry. This is just how to do top-down analysis. Keep it simple. Look for where price is most likely to go to, what it's looking to take out next. And the key thing is just knowing where price is currently priced at. You're looking like it's no different from go to Walmart, right? And you got 50% off on toilet paper. You're gonna buy up like 10 rows of them things. You know what I'm saying? Like, because it's at a discount. You know, you're getting them for, $2 a pop. I'm gonna buy it when it's at a discount, and I'm going to sell when price is at a premium, when that demand is higher. You know what I'm saying? So think of price in those terms. That was like one of the biggest aha moments, and that's what really took away a lot of that confusion on, think of price. No price is fractal. Always ask yourself those three questions: where price was, where price is, where price is going. Measure out and see from a monthly, weekly, daily time perspective where you are in terms of where price is. Once you know that, man, dude, I'm telling you, like, it becomes a lot clearer for you. It becomes a lot clearer. It becomes a lot simpler when you start framing these things from a daily basis. Now, like, we can jump into all kinds of other like models and techniques on, how to enter the trade and everything like that. But this is just top-down analysis, man. So what I would like you to do is apply what I've given you here. If you can take anything from it, apply it to your unique trading model, your unique trading plan. And I promise you, man, when you start to try to figure out what that daily bias, that weekly bias is, it's going to be a lot easier for you, because now you know what you're looking for, and you start to develop those anticipation skills. You know what I'm saying? So, yeah, man, that I would definitely like you guys to like, comment, subscribe, all that jazz. Definitely helps me. And it helps me grow the channel. Your comments absolutely help, because I would like to know. Ask any questions, comment if you liked it, if you hated it, if I rambled too much, man, let me know, all that jazz, bro. Like, I definitely am curious to see if I'm being helpful. At the end of the day, man, I'm looking to help you guys become better traders. So, and just shorten that learning curve, you know. Other than that, talk to you guys at another time.